Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great week, folks. And last week we had Nadex $10,000 cash giveaway. And you talk about focusing on something. I want to thank all the Tigers and Tigresses, first off, participating. And right now, I want to congratulate our winner, Romero Diaz from Roma, Texas. Romero, thank you so much, and we really appreciate you not only trading, but you had a big win here. And if you come over to TFNN, folks, you're going to see the top dog out here inside this contest was Romero, and he had $74,246 in profit. Pretty amazing. What's happening, man?
Hey, hello, Tom. I'm having a great week. How about yourself?
I am. Well, thank you. First off, thanks for growling and prowling with us out here. You know, I had actually heard you on Steve's show in the morning because you had actually won a $100 cash prize also. And
yes, I did. I did receive that $100 and also the book.
Yeah, and so on this acceleration, was this on a day trade, or was this a weekly that you accelerated up on this number?
Well, the first day I traded, and I ended up with $1,000 profit.
Okay.
And so afterwards, I designed a plan, a trading strategy, where it did involve a long-term strategy. So I did trade a day, but mostly I focus on a weekly.
Okay, yeah. I can see, you know, what's interesting about that, that's, I can see that. We had a nice volatile week, which is a beautiful thing, man, no doubt.
Yeah, that was perfect, and it did last the whole week, which was a great trading week.
Yeah, for sure. Well, listen, man, we will get you that $3,000 out tomorrow, plus the book, plus your another $100, and you know, congratulations, man. That's quite a win. 74 G's, man. It's not bad.
Thank you very much to you, Tom, and for TFNN for holding a trading contest that did pay mucho dinero.
Yeah, mucho dinero. It's a beautiful thing, man. So what are you going to do with it?
Well, I'm thinking of, you know, using some of that money to keep on trading, but this time with real money instead of the virtual money.
Yeah. Well,
and also, you know, use some of the money for that purpose, and the other ones, I'll think about what to do with it next.
Yeah, you know, to do yeah, absolutely, man. Cut it in half and go, you know, take care of yourself and your family. Go do something. Totally, man. Those chunks are nice, man. Do you know what I mean? Right?
Yes, they are. They sure are.
Totally. Okay, well, listen, man. Thank you so much, and you can expect that. We'll cut all those checks out tomorrow. All right, and so you can expect it the next few days.
Well, thank you very much, and I really do appreciate it. Thank
you so much. Have a great one, man. Have a safe one.
You do the same. Thanks.
And, folks, you know, as you go over to TFNN, you're going to be able to look at that leaderboard, and it's impressive. There's a few folks on there that stayed up there every single day. You had Willard up there every day, Norwood up there. Second place winner was Willard with 52,000. Third place was Norwood with 46. Some big trades. The first 20 winners are actually going to basically, well, the first place winner is 3,000. Second place is 1,500. Third is 750. Fourth and fifth is 500. 250 up till 10th, and then the out of time in the trade. But the top 20 winners here that we have out there, every single one of them was at a profit, which, folks, that is impressive in a huge way, particularly because when you are playing with funny money, you know, you can see that you can take some shots, but it's impressive. And I do want to thank each and every person out there for participating. Market-wise, let's take a look at it out here. We had the Dow up, right now the Dow's up 30, Nasdaq's up 19, Dow's down 30, Nasdaq is down 19, S&Ps are up 4.5. Gold rejected lower price out here today, had lighter volume, come back. It's up $15.30 right now. Nice wide price spread out here, 12.0810. Silver up 50 cents, 17.33. Silver has a lot more to do, but bottom line is repairing that damage. Platinum up $16 at $1,243 an ounce. Copper's up 4 pennies at $3.03 a pound. Light sweet crude is up 63 cents at 90.38. The bond market, folks, the 10-year and the 30-year bond are going to the moon. The 10-year is up 9 ticks at 128.14. It refuses to back down. 30-year is up 8 ticks at 139.15. That was after a wide price spread last week, accelerated volume, all of the above. And King Dollar has finally given it up. Bottom line, you can expect a retracement, and I suspect what you're going to have here, we're down 763 ticks at 86.06. You had an A to B equals C to D, which extended quite a bit. That's in the short term. Euro up 108 ticks at 126. The yen is down 79 at 108.97. Our phone number is 877-927-6648. It was called, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? You're going up with light volume. I expect we're going to get further up on the scale here. We're at 1967, and hey, we could even get to 1992. Bottom line is it's pushing. The volume's dying on the vine, and that's what you like to see if you're a bear. We have here is that today, thus far, the SPY got to 197.60. Your little swing point up there is the 198.30. We're doing that with 85 million shares versus banging out against 131. I expect you're going to get up further, though. Where this market is, you know, you're going to get this bounce going. It's going to be on lighter volume, which it is right now. And that what that would be setting up is the B to C of an ABC structure on the way down. NASDAQ Composite, same deal. NASDAQ Composite's going sideways out here today. You reached 4496. That composite can bounce somewhere up to 4546. Gold contract. Now, this is where it's going to get interesting. Gold today, you talk about price spread. We got gold was down to 1183. Right now, you're at 1208. You rejected lower price. You are just getting back inside the range. It's not inside the range yet. Gold's going to need more juice. You're talking about when you get into the 14, 12, 14 area, it gets inside the range. The larger range, gold's going to have to get back inside the 1241 area. Bottom line is, though, you're getting in there. What has happened is that the GLD set up just perfectly, which is pretty amazing. What the GLD had done on last Friday, folks, is that it was going into its swing point. That was the first low generated in gold after a year and a half. That was last June. The low of the GLD was 114.68, 109 million shares. We got down to 114.42 with 38 million shares. And then today you jumped right out of there. So the bottom line, you had 38 million shares versus 109. That's a nice setup. Now what you'll be looking for the confirmation of this is an expansion of volume off of that low last week. And, you know, we'll see how this baby shakes out. This, you know, and bottom line, if we get the expansion of volume, then gold's out of there for another serious long-term bottom. Silver. We take a look at silver. What we have with silver, silver's going to need a lot more work. But bottom line, what silver did do is have an expansion out here today. Silver is actually from low to high. This is pretty amazing, actually. A 34, you're talking about 70 cents. Silver's up 50 cents right now. And volatile, yeah, it's volatile in spades. It's pretty amazing. So silver, in order to get back inside the range, has quite a lot of work to do. You're talking about 1850. You know, but bottom line is that it got a rejection of lower price, and it got it going topside. Now, NASDAQ Composite. Let's go look at the 3 Qs. NDX 100. Because what had happened last week, folks, is this. It was the first week that Apple had closed under the 100.72. So the NDX 100, sideways to higher today, dramatically lighter volume. We're at 97.97. I expect this can get up to about 98.61. We're doing 27 million shares today against 58 million. And Apple's going to be, well, we're going to go through Apple and we're going to go through the IBB. Apple just can't seem to get over this and stay over this week. That's a big one because that's saying, guess what? Apple wants to trade the lower price. The IBB is the number inside the biotechs. IBB right now is trading sideways. We're at 272. That's probably going to test the high one more time. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, you get the Dow down 22, Nasdaq off 17, S&Ps are off 2.5. We take a look at some of the high-volume stocks in a low-volume bounce market out here. What you have, oh, this one's insane. Hey, check this out, folks. This is pretty intense. Now, this is unusual when you see something that's this quick. GTAT. This is GT Advanced Technologies. They went BK this morning. This stock was trading at $11 on Friday. Just kaboom. See ya, don't want to be ya, like ASAP. And the thing that absolutely is amazing, and if you want to see how the broker-dealer community can push out paper Well, this is a classic one, folks, okay, because you had Morgan Stanley and Goldman Sachs push out 9.9 million shares on December 5th of this, of 20, that must be, yeah, it's 2013. So it's not even a year. They pushed out 9.9 million shares, and they were the two main underwriters. It's pretty intense. What they're saying, and this company, what this company does, and this is where latching onto one deal is pretty intense too, I guess. Bottom line is that 75% of their revenue is from the Sapphire screens of Apple. And I'm not quite sure what is going on there, but that says quite a bit. So we'll see where this whole thing's going to shake out. But bottom line, big number. And most of the time, what you do see is that you see an equity start to move down. In this case, it looks to me like the CEO basically has enough cash and said, listen, I'm going to cut the cord right now, because that would be saying that in the next couple of months they would have got killed anyway. So what he's trying to do is cut the cord of the bills due, get out in front of it. When you look at, they had $1.5 billion in assets and they had $1.3 billion in debt. That's what they're saying. Hewlett-Packard's going to split in two. That's going to take about a year. That's up $1.87 right now. CareFusion is getting taken over. That's up $10. You have Micron Technology. That's down $1.43. Let's go take a look at Micron, because Micron's been on quite a run up. Okay, so it can't take out the consolidation. Interesting. So Micron's been in this consolidation since July of 2014. Looks like it's not going to take it out. Made a nice run up to the top, but you know, now the top of the consolidation is 34.84. We were up there with 30 million shares on July 16th. You get back up there in 33 million, and then today we go downtown with 38 million. That's going to set up another run to the end, the bottom of the consolidation, which is the it's just $29 level. Yeah. So we'll see how it ends up hitting that level. Some of the Dow stocks out here today, what you have Alcoa is up 41 cents. You get Caterpillar up 72. Oxy is up 103. Big Mac is down 85. Honeywell is up 43. You get Walmart up 5. 3M is up 28. If we go to 3M first, 3M is an equity that got destroyed pretty much. This is going to be a dead cat bounce. Yep, you just came down from 147. You're at 140.48. You can get a bounce going, but the bottom line is that that's setting up a B to a C of an ABC structure on the way down. American Express, AXP, we take a look at American Express. That also is set up. It didn't take out its swing low. The swing low that it's going after, folks, is 83.99. Last time down, last Thursday, I got to 85.06. Did have lighter volume, and that's what, you know, bottom line, that's what, I got a little bounce going here. I do expect it can get up to about 88, 82. What is going to be intriguing here, oh, I know. Okay, so we got to go over to the dollar. I got to go over to the dollar and gold. So watch this. This is pretty cool. So if we go to the dollar first, what you have is, this is a, I know many of you traders know Joe DiNapoli. This is a classic railroad. It's a classic railroad in the dollar index beyond belief. Okay, so what it is this. You get a huge expansion on the way up, then you give it back the following day. The way this trades, folks, is this. So we have 38,000 contracts today. The way that DiNapoli would trade this is that you wait for a 0.618 retracement of the move, meaning the move up to down and down to up, and that's where you're selling it, and you're putting your stop on the other side of it. So when I use the volume characteristic on this, it's almost like, okay, you're at 86.00. You'd be looking for a bounce to 86.61. That's where you'd be selling it, because what happens with a railroad track is that you're going to get a nice correction on the way down. And I suspect, you know, the way that we ran right here, you could have a normal correction and a nice run. And if I do it the most conservative way, that gets you 83.50, which would what? Which would give gold breathing room. And that's what's happening in the gold market also. So what you have in the gold market is, right now we are at 1207. You get another day, if we get another day like today, tomorrow, let's say if it's not tomorrow, the following day, what you'll have there is that would have broken the downtrend from 1322. You know, so when these things move, they can move fast. They're furious, and it looks that that's what we're going to have. For the volatility is inside these currencies in a huge way. The euro had gone straight down from 140 into the 125 area. A normal bounce on this euro is like somewhere about 131. You know, so the volatility is going to be out here. I suspect that's going to stay in spades. If we go to the FTSE and the DAX, what you're going to be able to see is that the type of bounces that we're getting, and this is really cool because what we did do last week inside the FTSE, first off, the lows that it had broken was 65.07, and what we did is that when we broke those, we broke them with slightly lighter volume, but it was still way too much volume. So that low that was established out here on Friday will get tested. Thus far, you're bouncing on dramatically lighter volume. The FTSE can bounce up to about the 66, 64 level, which is another 100 points. The DAX in Germany, we take a look at Germany, what we have with Germany. Germany, she was up 13 bucks today. I'll have to wait till I get the volume a little bit later. But Germany had already taken out the February 5th as well as its... First you took out the February level. Then we took out the March level. March level is 89.13. Yeah, 89.02. So what has happened is that the DAX is is just really weak out here. That, you know, our benchmark is that February 5th time frame. That's important to get your head wrapped around. Some of the XAU, the HUI, we take a look at the XAU first. XAU is at 79.66. That has a long way to go to get inside. That has to get back inside the 83.30 level. If we do take a look at the HUI, what you're going to have with the HUI is that we're at 193, and that has to get back inside 201. You know, what is going to be intriguing out here this morning, well, not this morning, this week, is that what you did have in the futures market, in the gold futures market, is that this had been one of the largest, from the reports on Friday, this had been one of the largest short positions on gold since 2010. Well, you know, bottom line is that they may have been scrambling a little bit today, but it needs another wide price spread accelerated volume. Then you'll see the buying pick up tremendously. It's Tom O'Brien, it's the TFNN. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow right now down 9, Nasdaq's off 16, S&Ps are off $1.50. We take a look at a few of these Dow stocks, what you have out here. You get Caterpillar up 59 cents, ExxonMobil's up 70. Let's go over to the XLE, because what you had with the XLE is that baby went south with the vengeance. We are at $88 now. It came off the high of 100, broke the swing point, has volume on the break. The swing point we're talking about comes back to April 11th. We put this on a weekly basis, and what you're going to see is that and this is where the February 5th whole time frame comes into whack. So check this out. This is the speculation, number one, of the benchmark that we have of February 5th. And on the S&P, that's 1737. The whole sector, the XLE, has already come down to it. So when you go back to a high volume low, which that's where the benchmark is from the week of February 7th. When you take a look at the XLE, the high of that low is $84.17. The low is $81.77. We had there 98 million shares traded. So what ends up happening? XLE goes from 81, trades all the way up to 100 with no volume. You know, I mean, dying on the vine. Then we come all the way back down. Now watch what we do, folks. We get to a low of 86.78. And the high of that swing point is 84. So we never made it to it. But what we also had now is a huge expansion of volume. We did 105 million shares versus 98. So what you'll at least get is a test of the high volume low from last week. Now, the real key is going to be, is this going to be an ABC structure on the way down to wipe it out? Well, we'll find out, and we'll be able to get a decent inclination as to how the bounce is going. And thus far, this is only the first day of the bounce. Thus far, you know, you have light volume. You've done 17 million shares. You're going into 21. You're going into 18. But I do expect you're going to get a little bounce out of here. You know, so we're at, yeah, it's just crawling back inside the range. Once it got back inside 88.22, which it just did today, you know, that baby can make a dead cat bounce pretty easy up to 90.76. We go over to the banking industry. We take a look at the XLF, and what you're going to see in the XLF right now is bouncing on light volume, 26 million shares after coming downtown with 56 million. I expect that you're going to see the XLF somehow try to get into 23.59 again. What we are going to basically continue to get is the news out of the AIG suit, with the most intriguing thing I think that we're all going to get out of this is what is the testimony of Bernanke, Gettler, Henry Paulson. Henry Paulson was the Treasury Secretary at the time. He was on the stand this morning. So AIG received harsher terms than other institutions in 2008 financial crisis because regulators wanted to send a message to the markets that government help would cost them. Henry Paulson, the former Treasury Secretary, testified. It was important that terms be harsh because I take moral hazard seriously, Paulson said, referring to the economic term for consequence-free risk. His appearance on the witness stand came in the Washington federal trial of Hank Morris Greenberg. Star International's claim that the government illegally took equity in the insurer. Star, AIG's largest shareholder at the time of the bailout, claims the government punished the insurer by demanding equity and imposing an effective interest rate of 14% on a rescue loan, far higher than the interest other bailout recipients, such as banks, had to pay. So check this quote out. It looks to me, folks, the way this is coming down is that you're going to see AIG win this case. Because what you also have to is you got to remember something, that these guys that are testifying now are out of government now. Okay, so this is where this thing comes down and says, hey, I'm out of here now. Maybe I will tell the truth. We'll see. But check this out. This is Paulson said he valued stability above all else in regulated markets, followed by the need for market participants to be responsible for the consequences of their actions. In his testimony, Paulson drew a distinction between AIG's treatment and that of Citigroup, which he acknowledged received better terms than the insurer. AIG had to be rescued because if it failed, the country faced a real disaster, Paulson said under questioning by Starr's attorney David Bowles. The government avoided punitive terms for Citigroup because it feared doing so would encourage short sellers to attack other banks, further destabilizing the economy, Paulson testified. What Paulson also did testify to, folks, is this. And as we're on Henry Paulson, it's something important that one of our tigers are bringing up in the den, is that when they did bail out AIG, folks, one of the biggest recipients of the AIG bailout was Goldman Sachs. Got 100 cents on the dollar back from everything that they would have took a hit that would have been extraordinary. There's no doubt. But with this, check this out. So with Paulson, this is like the here you get this. Check this out. Paulson said. Okay, Paulson said he advocated fairness to the extent that you can have fairness, but to me, stability trumped moral hazard. AIG, this is Paulson's quote, AIG had become a scapegoat for all Wall Street and all of the bad practices people were angry about, Paulson told Boyles. Paulson also acknowledged telling both presidential candidates, John McCain and Barack Obama, that they shouldn't be unhappy about the AIG bailout because shareholders have been treated harshly. You're going to get to the bottom line, folks, in all of this is that AIG, my take on it, was a backdoor bailout of the large broker-dealer community. They got paid off, and they basically did steal the shareholders' equity, you know. And in the context that, yeah, well, guess what? You could have let it fail. Let it fail, and then see what happens. And if they had let it fail that day, what would have happened is that those banks would have absolutely got taken to cleaners and probably failed too. And that is the basis of, I suspect, one of the arguments that are inside that court case. Because what did happen is that, if you remember, the banks themselves, first they were broker-dealers. Then the Federal Reserve let them turn into basically holding banks overnight, which is unheard of. And what the difference is, just so you understand what the difference is once you're a holding company, a banking holding company, they could go to the Fed window that second and get billions and billions and billions of dollars for nothing. And that's what happened. That's how that whole thing shook out. So, it's going to be, Geithner was supposed to testify today. For some reason, it said that he couldn't testify today. So we'll see where that whole thing comes out in the next few days. Bonds, let's go over to the 10-year bond first. What we have with the 10-year bond is at 125.14. That's hovering near its highs again. 125.30. 125.30 is the high out here for the last 6 months. I expect you're going to build a little cause here. Basically wants to launch that whole area. We go take a look at the 30-year bond. We have with the 30-year bond. That's at 139.15. Same type of setup. You know, these things are powerful, and just the way it looks, that no matter where you are in the world, folks, what you are going to have is low rates. Where the 10-year yield right now is at 2.4 in the U.S., 2.3 in the UK. France is at 1.2. Germany's at 0.9%. You know, so the whole money deal is a worldwide deal, and us being at those high prices make a difference. What's going to be intriguing now, the biggest thing this week that I think we have happening inside the NASDAQ, it's the IBB and it's Apple. Apple can't launch that area. IBB is just about ready to basically give it up. If we go over to GILD, which is one of the largest holdings inside the IBB, that's pulling back slightly today. It's back $1.75. What you haven't had yet is you haven't had wholesale selling in the IBB. Celgene is still hanging up there at 94.36. So the IBB bottom line is that has not topped yet. You know, it's come downtown fast and furious, but it looks to me like this little baby is going to try to top out up here again. We're 271.73, and the high is only 280. You know, so that absolutely is game to get topped out again. Amazon, let's go over to Amazon. What you have with Amazon, that's going sideways. That wants lower price. Fundamentally, what is really wild, not so much about Amazon, but Jeff Bezos, we'll talk about when we get back. Because what he's doing with the Washington Post, that's the thing is going to be, it's powerful now, but it's going to be a lot more powerful. This is Tom O'Brien, this is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials right now down 11. NASDAQ's off 19. S&Ps right now are off $2. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We have the Dow Industrials right now down 15. NASDAQ is off 22. S&Ps are down 3. And last week, folks, we did have a $10,000 cash giveaway Nadex contest. Right now, we have the second place winner, our man, Mr. Paul Willard from Monroe, North Carolina. And Paul came in with $52,841.75 in profit, which is a spectacular feat. Paul, congratulations, man, and thank you for out here growling and prowling with us.
It's so fun it's part of the TFNN contest. It was wonderful.
Hey, so let me ask you. You know, I see you were number 3 on Thursday. So you went from number 3 to number 4. What vehicles were you trading, Paul?
I was trading intraday since Monday. I was just sending orders of 10, but on Wednesday I was talking to Darryl Martin, and he was telling me that you can send orders of 10 multiple times, and
sure,
I was his system on volume spikes and magnets. So I was looking for contracts through his scanner so you can find them fast, and he worked out pretty good at the end.
That's great.
On Thursday I made like 30, and then Friday another 30, so it's pretty good.
Were you trading currencies or the indices or commodities?
Everything. I was looking for everything.
I love it. I love it.
1 hour.
There's some real focus, no doubt about it, man. And how long have you been listening to TFNN?
For about 6 months. Yeah. It's on in the morning since 9 until like 4 every single day. So it's wonderful. I love it.
Well, listen, man, I appreciate it. And how did you find us?
In December, I was talking to my uncle about trading stocks. So I went online looking for the best way to learn, and I found Apex, the company that Darryl
sure
did, and then through him I found your radio show, and since then it's been wonderful, a wonderful ride.
Cool. Well, listen, man, we really appreciate you growling and prowling with us. Congratulations. We'll get that check out to you tomorrow. And the check's for $1,500. You'll get also the Art of Time in the Trade, your Ultimate Trading Mastery System. And, you know, I hope you, number one, enjoy it. You know, bring your family out, go have a good time, and, you know,
thank you.
And double and triple it again. You absolutely came in with some big dollars. There's no doubt about it.
Yeah, that's true. Thank you. And I want to say thanks to everyone who helped me, especially Darryl and his team, wonderful people, and the radio. All the hosts from your show are wonderful, and thank you so much for everything.
Absolutely, man. Have a great one. Have a safe one. Now, that's pretty neat, folks, because what he had done, if you trade this Nadex product, Darryl has a scanner, and that scanner can get you, it doesn't tell you where to go long or short. What it does do very quickly, though, will get you the best contracts to trade for the strategy that you're dealing with, which is really cool. When we do look at the top 20 winners, which the top 10 are getting cash prizes, the top 20 are getting prizes, each and every one of them came in with profits. The smallest profit for number 20th place was $5,983, and that in itself is a great feat because you're talking about, we're not talking about what was in their account. They started with $25,000. We're talking about $5,000 on top of that. The first place winner was $74,000 in profits. The second place winner was $52,000. And the third place winner, we got to get a hold of Norwood because this was really consistent. So check this out. You know, when you have these contests, folks, okay, you know, bottom line is that, you know, you could trade many contracts. It's still funny money, but, you know, you can make some larger. Well, we kept it, you only can do 10 contracts. But what you could do is you could do some bets that would be binary bets that, you know, could be very risky with real money, but bottom line is that, you know, with funny money, you can take that shot. What's so impressive about Norwood is that from day one, he was in the leaderboard, or she was in the leaderboard. I'm not sure it's a male or female. We'll try to get hold of him, though. The first day at $18,975. Second day, $17,000. First day was in number 2. Second day was in number 2 at $17,229. Third day was in second place at $30,907. Fourth day was in second place with 41,000, and ended up in third place with 46,000. The consistency of that account is amazing. We want to know what they were trading out there, because there's no doubt when you get that type of consistency 5 days in a row, you're talking about a strategy that's in place that is pretty consistent. What was really cool, there's no doubt, is that we had the high volatility last week, and you've heard that commercial many times, that your trade is your stop. If you haven't test drove this Nadex product yet, folks, come over to our website at TFNN. You can hit the banner, bring up a account. They will fund it with $25,000 funding money. Don't forget, every day right here at TFNN, we do live program from 8 in the morning to 6 in the evening. So you're going to be able to find plenty of trades inside the currencies, inside the commodities, inside the indices. Right now, as we're speaking, you're going to see that the dollar just gave back everything that it had on Friday. What this is definitely a railroad, well, my speculation, it's a nice railroad track that's set up. You did 42,000. What that would set up is this. It's going to set up a little dead cat, well, it wouldn't be a dead cat bounce, but a little bounce in the dollar. And that would be a sell in the dollar, and that what would end up happening. Then you would get the correction inside that dollar for the type of expansion that the dollar has had. Now, inside the gold market, what that does, inside the silver market, inside the commodity market in general, it's going to give that market time to breathe. The GLD did exactly what it should have did, meaning tested the low, had lighter volume, substantially lighter volume also. The gold contract itself, we're at 1207. I expect what you're going to see another day of strength right after this, because you get the rejection right now, you get the lighter volume, you get all of the above. We get that, baby, and you're really going to have something. Oh, this is a beautiful thing. We get Chris Norwood. He's from Hawaii. Hey, Chris, congratulations, man.
Thank you, thank you.
Man, let me tell you something. You are impressive, man. Well, first off, we will make sure we get this money out to you tomorrow. All the checks are going out tomorrow. But let me tell you, man, that you stayed right up there, man. So what were you trading? Tell us how you got so successful.
Mainly, I trade currencies. I trade the last 2 hours of the U.S. 500, which is the ES futures.
Yes.
And but mainly the currencies. And it was actually not as good of an environment for my strategies this last week because of the higher volatility. Kind of threw some of it off, but managed to pull out some good money management and be able to get some gains here and there.
Well, I really congratulations, man. We're going to get that right out to you. I mean, you're the only person that every single day you're in the, you're in the top 3, man. It's quite a feat, man. Thank you so much. Aloha, brother.
Aloha.
You stay right there, folks. We're coming right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great week, folks. We had a $10,000 cash giveaway contest last week, and if you go to the front page of TFNN, folks, you're going to see the winners. And I do want to congratulate each and every person that was in the contest. The top 20, well, quite a few people, more than even the top 20, came down with some big numbers, folks. It's pretty impressive. The top winner won $74,000. It was $74,000 in profit. That was in his account. That he'll get $3,000 for the top winner. The second was $52,000, and that's going to be $1,500. And the third was $46,000, and that's going to be $750. There's going to be 2 prizes at $500 apiece. That's going to go to seller. One trade had $40,000, another $30,000. The next 5 are going to get $250 apiece. That was $27,000, $27,000, $22,000, $18,000, and $14,000. We're giving 20 prizes away in total. Each one of those 20 on all the way up, folks. The smallest winner, the number 20, was $5,983, which is still hugely impressive. That would be a 20% gain in the course of 1 week. So pretty incredible. You can check it out on the front page of TFNN.com. Market-wise, let's take a look at it out here. We had the Dow Industrials down 17, NASDAQ off 20, S&P's off 3.5. Gold contract up $14.20 at $1,207 an ounce. Now, we had with gold is this, folks. Gold got down to a price point out here today of $1183.30. Banged into that, actually, on the overnight session. It hit that baby the first time, let's see, at 6:20 in the morning. Bottom line, tested that out again at, it was 6:20 last night. Opened last night, hit it last night. Tested it again. Once we start crawling back up, and then once we were getting close to our markets opening, it started getting some juice. The first juice that got into it was 0800. They opened at 0820. What you did get is that at 1250, we get a little juice into it. Price spread out here, we went from 1183 to 1207. Now, what gold is going to have to do is get another sign of strength. One more day like that today. You're not inside the range yet, meaning the higher range. Gold has to get back inside 1214 to get inside that range. The larger range is the 1242. Silver. What silver did, silver was impressive. You know, they both got a stock. That's what they were, more than impressive. Silver, though, man, that thing is so volatile, it's amazing. So silver went from a price point of 1666 to 1730. That's going to need another, push up like that, but it's very well capable of it. Inside 1870 would be the number that it would be inside the higher range and off to the races. But you get to 1870, you're off to the races, period. It gets another sign of strength like it had today. That's saying we're going topside. Oil. We go take a look at the oil market. What we had with oil out here is that oil was up 68 cents. You're at 90.43, and more than likely we're going to see oil probably trying to run into 92, 96 again. Oil looks that it's still doing an ABC structure on the way down to that 85 area. Bonds, the 10-year and 30-year, folks, just refuse to back off. The 10-year right now is at 125.13. The 30-year is at 139.15. In both cases, they want much higher price, lower yields. Right now in the 10-year, we're at 2.419. And if you are thinking of remortgaging, getting a mortgage, all of the above, folks, go do it. Because what happens at this level here at about 2.4 on the 10-year, because the 10-year basically dictates the mortgage rates, you should be pulling down a 30-year at about 3.8 to 3.9 or into 4%, which is a beautiful thing. And yeah, I expect them to get cheaper, but guess what? Don't mess with it, folks. A 3.9 is better than a 4.5 where we were only about 5 months ago. So it's basically a decent number. King dollar. Now, King dollar, folks, had an amazing run. King dollar went nonstop starting July 1st from 79.80 up to 86.84. Fast, furious, whole ball of wax, okay? So, Friday, we do another huge expansion with volume and, extended in a huge way. So, what we do have here is this, is that King dollar has given back everything that was had Friday, and when you do something like that after a run like this, folks, you can expect a decent correction, a normal correction, just a normal correction, and a bull move, which I expect this dollar is a bull move, will get you to about 84.10, and that's not huge. That's down a buck plus another 700 ticks. More than likely, we're going to do a 50% move or correction, which you get to 83.26. The reason I'm saying that is that because this move has been so extraordinary, once they can get it going a little, it just makes sense you do a 50% correction of the move. We'll be able to tell when you actually then how you back into it. I have a question in the den. When does it become overextended? Any measurement? The measurement that I use, that's a great question, number one. So here, let me bring you back. The measurement I use for overextended is A to B equals C to D. Is a 1-to-1 point ABC, a 1-to-3-2, 1-to-5-0, and 1-to-6-1-8. That's what I use. You know, people can use different things, but that's a great question to ask. What are you using in order to, or what is your definition of overextended? That's what my definition of overextended is. And this was overextended in an incredible way. Let me just see something. Because what you also can get, depending on, like I just put up Bollinger Bands for you. And what happens with Bollinger Bands, it just tucked outside just for one day. But I remember interviewing John Bollinger many times. He says, when they get to the top of the band, he said, they love crawling up that band. I remember Yahoo in the 90s. That thing crawled up that band in an incredible way. So using his Bollinger Bands, that would have been just tucked outside just for one day, which is not a big deal, by the way. Okay, but it is the aspect of what are the fib numbers and what has been the expansion, and in this case, that's what we're talking, the expansion. Now we're talking about the contraction. If we go over to the euro and you want to see just the opposite, just the correlation inside that opposite, is that what you have that's at 126, came down all the way from 140. So at this particular point, what you'll be looking for is a bounce in the euro, a bounce in all these other currencies. It gives the commodity market room to run. You know, I want to welcome Everbank. Everbank as a sponsorship. They're back as a sponsorship. They're right on the front page of TFNN, folks. And if you come over to our front page, what you're going to see on the right-hand side is that you're going to see market-safe bricks. What this is about, this is a CD. And it's a CD, folks. It's a 3-year CD. And they call it a market-safe brick CD. And what you have is this, is that it takes $1,500 to open it. The CD is 100% protected to the downside, so you can't lose money on it. There's no monthly account fee. It is FDIC insured, and it is IRA eligible. What this particular CD does, it's called Market Safe BRICS, BRICS CD. It basically puts you in the currencies of Brazil, Russia, India, China, and South Africa, a.k.a. the BRICS nationals. So it puts you in those currencies. If those currencies happen to go up into the correlation of where the dollar is, guess what? You get the principal back, plus you get the up of that area. Now you can see what just happened here with the dollar. The dollar had said a huge expansion move. What would that mean? It mean that those other currencies are down. If you are looking for something that is principal protected, 100% FDI insured, go to our website at TFNN. You can also call them at 855-750-4051. It's 855-750-4051 to find out more about it. Come right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished down 17, NASDAQ was off 20, S&Ps are off 4.5, and as we do each and every Monday at 20 past the second hour, we have our Tigress, Amy Smith from Investor Business Daily. And folks, if you haven't test drove either the digital product at investors.com or the paper at Investor Business Daily, you can come over to our website at TFNN. You're going to see the banner on the right-hand side. You hit that banner, you can take your choice, either 2 weeks of the print edition or 2 weeks of the digital edition. If you're on the computer, I suggest you take the digital edition because it's some great educational tools on that website each and every day. The paper has it, of course, but it's the interactive of the investors.com is dynamic. Amy Smith, what's going on?
Hey there, Mr. Tom. Everything's great. How are you?
Good. The fall's kicking in. We got our first cold front at 76 degrees here today. It's beautiful.
Oh, that must be just picture perfect.
It is. It's insane.
Yeah, nice and cool. Well, cooler for you guys is what I mean.
Cool, if that's right. I get my boots on, my horse is outside. I'm all set. I'm telling you.
Well, you know, we had a change in the market wind.
Okay.
It started last Wednesday. You know, it kind of just is, it's when the perfect storm comes together. We had weak economic data. We had the unrest out of Hong Kong. We had the first reported case of Ebola, and just all kinds of stuff came together. So last Wednesday, we know that the indexes fell below the 50-day. There's a lot of big volume on the selling. The leaders sold off. So IBD changed to market and correction.
Okay.
Because at that time, we'd had like 7 distribution days, or the heavy days of selling on the NASDAQ. And that's a lot in a short period of time.
Sure. No
Of course, then we get Thursday, and there was a positive jobs data, and unemployment fell below 6% for the first time since 2008. So the market like that, we're trying to rally up for a couple days in a row, did not see as heavy a volume on the sell. There was some decent volume on those two upside days, but not as much as there was on the sell-off.
Sure.
But here's another little confusing wrinkle in it. We have, the put call is a very secondary gauge, but, it went up to 1.07. It was a sixth close over 1.0.
Okay.
And usually you're reading over 1.0. We've seen short-term market bottoms. And it's been amazingly accurate this year. It's not, the put call's not always that accurate, but this year it's just been like clockwork. But we got turned around today. Both the NASDAQ and the S&P are below the 50-day. We had kind of a up and down day today. It was good to see us. We opened higher, then we fell, and then we recovered somewhat. We start into earnings. We'll see if this is a catalyst. I don't know what kind of window dressing everybody needs to do by the end of the year, whether we're going to get the Santa Claus rally. But historically, the fourth quarter is a better quarter. It's a good one.
And we get good old Alcoa coming out to kick off numbers again, right?
I know this is your favorite stock.
Oh, yeah. No doubt. And Alcoa is coming out the 8th, folks, after the close. So that's Wednesday. Wednesday we kick off. Wow, it's close. Amazing. That's quick. Yeah.
Yeah. Although, since we're using Alcoa in a few more products now, it's not quite as dead as it used to be.
Right. No, there's no doubt. There's no doubt. And what you do have there, what happens, and this is a total mind blower, folks, about the aluminum business. The aluminum business, the biggest expense that they have is oil. So, you remember, when the commodity market started booming in 2001, I was always looking at Alcoa saying, why can't they do anything? But then I realized that oil is their number one ingredient. So.
And, of course, commodities have come down, right?
Oh, commodities got killed. Yeah.
Oil has come down, so
and that'll help them. That's right. That
will help them.
Yeah.
Now, I don't know. Do you have a clue what all this hype is about? Last week we got Elon Musk.
Yeah.
He was tweeting
Tesla.
It's about time to unveil the D.
Yeah.
And something else.
October 9th, I guess, huh? Okay.
Yes. So people think it's going to be a car with driver assistance feature. Is it going to be the less expensive car that he's unveiling? Possibly. And then the other rumor, of course, we won't know until we find out on Thursday, that this car will probably have a lot of Mobileye safety cameras in it to help with that, the driver assistance part of it. And Mobileye is the number one company that produces the safety cameras. They have 80% of the market. Is an Israeli-based company. So Thursday will be kind of interesting. We'll see.
It will be. I guess, this thing is coming at us. It'll be interesting to see whether he just makes a electric car that can come down on price for the masses,
Right.
So that S model is insane. It's so beautiful. It's unbelievable. There's no doubt.
Well, and you and I have discussed, and this is the big, and I just pose it as a question. We've talked about it before. Oil prices are lower. Am I going to go out and buy a mid-priced electric car?
Hey, listen, we both know the USA, it's a hard choice. I think he's going to sell... He'll sell those S models at least on how beautiful they are.
Yeah, they are. They are.
Yeah.
Someone was telling me, who was I talking to? What city were they in? They said they're everywhere. And, if you're in sort of a, more wealthy area, these Teslas are kind of the hot...
We have a lot of them in Florida. We get a lot of them right in these parking lots.
Yeah, you know what? It's the car to drive around town.
Yeah, you can go 320 miles, so it's like,
right.
It's a long way.
Right.
Hey, so Christmas... GoPro.
Yes, GoPro. You know what? Here's take a look at the chart on that. Have you seen that? Look at it, Tom. It says the ticker symbol, if you're listening in, is GPRO. Nothing can stall this stock, apparently. It's, we had, again, this was another one that had some bad news last week. The founders did something that upset a lot of investors. There's a lockup period when it comes to IPOs.
Right.
Well, they broke the lockup period, and they sold 5.8 million shares to form a charity, which is a nice thing to do, except the investors got slammed with a 12% drop in the stock. But it did recover, and now it's way back above that price again, Tom.
Right. And just because it's the broker-dealer who allowed them to do that, though.
Yes, that's right.
So it's the bank that allowed them to do it.
And, you know, I saw a Forbes interview, very interesting. If you guys want to take a look on YouTube, it's a really great interview. You know, not only is this camera popular, they came out with 3 new cameras.
Okay.
Not only is it popular with surfers, snowboarders, you know, rock climbers, skydivers.
Sure.
Now they're showing us they're being used by the Army for all kinds of different reasons. They're being used by surgeons who are, you know, using them. They're filming surgeries, and then they're using these for teaching purposes in med school. Then they showed something that was astounding. The Discovery Channel is using tons of GoPro cameras.
That's big.
That's pretty big. And they're using them in movies and various different things.
Oh,
and you can mount them on drones and fly around. There's all kinds of uses for these cameras. And they range, the new Hero is like $500, $600, but they have a cheaper version that they just released that's $139. It's still supposed to have the resolution's beautiful, the pixels and all that kind of stuff. So, you know, I guess we're going to have to see how well this thing sells during Christmas.
Well, now you just brought up a great point, though. That opens a whole bunch of other channels, distribution channels, which are much bigger than a holiday channel, right? Yeah.
Yes, exactly. Yeah. I mean, it showed the Army using them. If you just think about, there's just a number of people that could put these cameras to work.
Right, right.
So we'll see. It certainly has zoomed higher right now. It's up like 88% in the last 26 days.
It's amazing. There's no doubt. Listen, folks, come over to our website at TFNN. You can see the investors.com banner on the right-hand side. You can hit it. You can take your choice, either 2 weeks of the newspaper, 2 weeks of investors.com. Amy, you have a great week, safe week. Look forward to speaking to you right back here next week.
You too. Take care, Tom.
Thanks so much. You stay right there, folks. So come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down 17, NASDAQ off 20, S&P's off 7. As we do each and every Monday at 20 past the second hour, we have our man Chad Coco from TD Ameritrade Think or Swim. Chad does the best option show on the planet, folks. It's right here every Tuesday, 12 to 1 Eastern Standard Time. Now, you can get all the programming at TFNN right on your cell phone, folks. We do live content from 8 in the morning to 6 in the afternoon. We replay that. Chad's show is on tomorrow, 12 to 1. Right on your cell phone, you just put TFNN.MOBI, TFNN.MOBI. If you want to get Tiger TV, just go to TFNN.com. You'll see the Tiger TV in the top right-hand. Hit that button. You'll get the charts as well as the audio. If you haven't test drove the Thinkorswim platform yet, come over to our website at TFNN. You're going to see a banner on the very top on the side. You can hit that banner. They'll bring up the account. They'll let you trade with paper money. I use it each and every trading day, whether you're trading options, commodities, equities, or futures. It's on one platform. It's an outstanding platform. Chad Coco, what's going on?
How's it going today?
Going great, man. You having a good day?
Yeah, so far pretty good.
Is the fall kicking into Chicago yet?
Oh, yeah, it was 40 degrees over the weekend.
Okay, you got some action, man. Yeah, 40 degrees, I guess. The fall is beautiful in Chicago, though. You guys get 3 or 4 more good months, no doubt. Well,
we sure do, yeah.
At least 3 months.
Oh, we hope.
Yeah, I'm with you. So, volatility. We had some nice volatility going both ways last week.
Yeah, sure did. And then today, too, it continued on up. So even though the market wasn't really sure what it wanted to do, vol still went up.
Yeah, hey, this is interesting. I wanted to ask you that, right? I mean, this is intriguing, folks, because what you do have is that, the S&Ps are only, well, they were down only $2. They're down another 5 right now. But that's intriguing in itself, that basically saying it doesn't have to be nervousness, but people are hedging. That's what that's saying, at least, right?
Yeah, it could be. It could be hedging, or just putting on new open option positions. There's just a lot more options trading in the S&P than there was previous, I guess.
Yeah, and what we do have, folks, you got to remember something, that we have weekly options now, but the option market in itself, every third Friday was an expiration gets done. And what's always intriguing to me, Chad, is that this month, I mean, it's almost like in the middle of the month. It's a quick one because, the first Friday was only the third day in the month. So we're at the 16th. So that's going to be intriguing coming up to that date.
Sure is, yeah, to see what happens in the market.
When you take a look at the Apple still basically is flat. I was just talking with Amy Smith at IBD, and we're talking about GoPro, right?
Mm-hmm.
And
can't be stopped.
I know, man. I mean, GoPro, today is up $6, folks, okay? And what happens is that whether you're going long or going short, when you get, well, let's talk about the short position, because people have been trying to short GoPro. And right now you have a short position at a 41.32%. And this is where it's important that you really understand options, because, anything over 10%, Chad, I'd say don't even bother shorting it, okay? But the reality is people want to short the stock. And I start looking, it's not bad, in the next couple weeks, okay? They're getting about, what, 6 or 7%. But going out a couple months, man, you're paying up for this in a huge way, aren't you?
Yeah, sure are. There's a lot of implied volatility in those back month options still, so the price of those, the premium's really high. So if you're going to short, I'd probably do something, maybe like I don't know, something covered at least. I wouldn't do anything that's just completely open. But some kind of risky fine trade out a little bit farther out would be a little bit safer of a bet.
No, I agree, man. It's pretty bizarre, and that's where you basically would get into the spreads, folks. Okay, that's how you can get that. You're not going to hit a grand slam, but guess what? You're going to get a home run. You could hit a home run.
Right.
Because if you're just going to put it in red or green, it is not where it's at. Because just to give you an idea, going out to December, this is trading right now at about 90. Where are we at? We're at 90.71, right? I think. 1 second. Hold on. GP. Yeah, we're 93.79, and the 90s going out. If you just were going to put it on a red or black, get like way too dicey. I think it's $24. 1 second, let's see.
Yeah, at the money. The 90 strike puts are going for about 20.
$20. Yeah, 18, 20 to 20, 40. That's pretty amazing, man.
Yeah, there's a whole lot of Vega built into that. Actually, I'm going to talk a lot about these the Greeks and how those relate to these type of numbers tomorrow. So somebody's new into options, it might be a good show to listen to.
No, that is huge, man, because it makes such a difference. And folks, Chad does an outstanding job every day. Okay, he happens to be having the radio show on Tuesdays at noontime. But it's important to understand what the strategies are inside the option market, because whether you're covering positions you have, whether you want to put new positions on, it's a whole full hour, great show. Check it out tomorrow. Chad, you have a great night, safe night, and of course we look forward to the show tomorrow.
Well, thanks, you as well.
Okay, man, have a great one. Have a safe one. Let's go to Jack in Jupiter, Florida. Hey, Jack, what's going on? Is Jack there?
Yeah, can you hear me?
I sure can. How you doing, man?
Okay, good. I'm doing great. How about you?
I'm doing great. Thanks for calling. Thanks for holding.
Hey, I had a question. On Friday, you mentioned that you'd love to see the S&Ps go up another 10 points because that would be a good short opportunity. And sure enough, it opened almost exactly 10 points higher. And I put on a lot of shorts and had a successful day. But I was surprised that you feel like it has to go higher from here.
Yeah.
Why is that?
So what you have is this. Where I'm gauging this, there's two different gauges on this, right? So first I'm going to put just the SPX up, so I'm going to show you both of these gauges, okay? What markets love to do when they do a downdraft, right, or an updraft, either way, okay, when they do a counter-trend bounce, they like to go to the bottom of the last area they were at, okay? Now that bottom, they hit it perfectly today. The bottom was 19, well, they didn't quite hit it, 1979.06 on the cash S&P, okay?
Right.
So that's your first gauge, and that's always very easy to do visually, folks, okay? That's kind of like, okay, that's what likes to bounce it. So when I was doing that, Jack, right, I was looking over and saying to myself, hold it, look at this little tiny swing right here. So there's a little tiny swing that's hanging out from the 30th of September, which is 1985. It's like, you know what? This thing can get that deviant coming into it. And what it also gives you there is you'll know whether it's failing or not failing. So that's where my head is with this. And if I bring you over to the SPY, and we take a look at the SPY, that same number, like you can see what the SPY did out here, that same number on the SPY is up there at 198.30. And then the bottom is 198.50. So when I'm looking at a management, you know, risk versus reward, that's a nice place to put your back against the wall. And then if we come over and we actually look at the future now, ESZ4, and when I put that indice up, it's like, you know, right now you're down 6 1/4. This thing is selling off after the close. When I look at that, though, I'm using the same date, meaning of the 30th. That would get you a 1978.25. So that's where I'm at on that.
I see what you're looking at.
Yeah.
I see what you're looking at. Yeah, but it seemed like you nailed it exactly right on the nose. And I was thinking we'd get follow-through tomorrow. I know it's selling off after hours, but I know that's not trustworthy.
No, and this is what ended up happening. So picture this, right? You know, basically we did pretty good last week, okay? And this morning I'm flat. And when I saw it started to sell off, I'm saying to myself, oh, man, I don't believe this, right? Meaning that, okay, hold it, it's not going to hold. But intraday, the way it was selling off, it wasn't enough. Now, what this has to do with, folks, is this. You know, it has to do, I talk about many times about the amount of energy it takes down to go down or up. And what's happened right now is that it took a huge amount of energy, you know, for us to go that far down that quick. We went down pretty quick, you know. So what I was looking at intraday, I says, no, it's not going to have the energy to go back down again because of the amount of selling that got taken, that was done.
I see.
You know, but we'll see, you know, because the futures are down, but it looks to me like, see, we went down intraday here today at 1250. There's only 29,000 contracts. That was going into 111,000 from Friday. So it's like this thing wants to bounce a little. And that's, you know, that's all I'm expecting is a bounce. But these bounces can get really deviant, you know what I mean? So.
And so you did it again from that 1984, 5, 6 level?
That's what I'm waiting for, man. You know, I thought it might have taken off without me today, and I was like, oh, no, don't do this. So, and what specifically you're looking for is this. You're looking for it to get there, number one, to reject the price, and to have lighter volume. You have all of that, and then what ends up happening is that then you only need to stop 3 or 4 points above that, and you're going for a monster ABC down. That's how that's set up.
Beautiful. Thanks for explaining that. I got it.
Okay, man. Have a great one. Have a safe one. Dow Industrials right now closed down 17. NASDAQ was off 20. S&Ps were off 2. They're down about 4.5 right now. We'll find out what is pushing those lower. We're going to be right back, folks.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow is off 17, NASDAQ 20, S&Ps are down 6.5 right now. After the closeout here, TCS, the container store, that had closed at $21.89. That is trading out right now at $19.60. And let's see, number-wise goes like this. So they missed their estimates. That's the bottom line. They saw year sales at $821 million. Now they see $800 to $810. They had seen the earnings per share at 46. Now it's going to be at the lower end, 41 to 46. What is intriguing about this is that this is a new IPO that was put out in October of last year. It went out at $18, but the first day, folks, it had traded up to 34. It started out at 34. So bottom line is that what you're going to see here, it looks like it's a monster ABC structure on the way down. So there's going to be big trouble here because your A point on this is 28. Your B is 20, so that's $8. That'll send it into about $15. Yeah. So $15, here it comes. Pretty amazing. And what that also says, the Container Store, just about anyone that had bought it on that IPO as they're pushing some of this garbage out, has never made any money on it. Well, they made money on it if they sold it the first day. Let's go to Bill in Boca Raton. Hey, Bill, what's going on?
Not too much. Good to talk to you again.
You also, man. How's the weather over there? You getting a little cool front in? Cold front, hopefully?
Oh, it was Sunday was like, if you could patent that temperature and just keep it like that, you could sell property over here for about $1 billion.
Billions, I know. Seriously, man.
It was beautiful. No humidity.
Yep.
Just a nice 68 to 72.
How cool is that? Yeah.
The sun's out. Perfect.
Yeah.
Welcome to Florida.
Blue skies. I know, man. We got it. Next 8 months. Here we go.
Yep. You got it.
Okay. So you want to look at Laureate first?
Yeah. I've been selling cover calls on that for well over a year.
Okay.
And, putting, and along with their dividend, putting some nice money away. And then all of a sudden, obviously, it hit 68 based on rentals buying them out or potentially buying them out.
Yeah.
And evidently, it's a long process. And I'm just wondering, I've got a fair chunk of the portfolio in that.
So is the deal still on that Reynolds is going to buy them out at a certain price?
Mm-hmm.
Okay, and the price is
60. It would come out at 68.
At 68.
Mm-hmm.
So let's see. So what your question is that should you sell 68 calls or 60 calls? What is the question then?
Question is, does it look like it's still a hold, or you think it's just one of those gambles with the feds and everybody else being involved in the darn thing?
Well, I can tell you that if I normally have a stock, and then if it goes off at where the price is, right, I sell it, because then you get your money and it goes somewhere else, right? Now, and the aspect that you have this and you're doing calls simultaneously, selling them, I suspect that, number one, it will come off. And I would just sell calls as close to the top as you can, man, because I'm trying to figure out, it seems like, oh, no, they're paying nothing for them. I see. Okay, no, that doesn't work. Okay. Yeah, there's no juice here at all. Okay. Whoa.
No, what I've been doing is I've been just selling calls maybe $1 out or $1.50 out or something like that, picking up a little extra change. Right. But my fear is that all of a sudden everybody says, okay, we signed the papers. And you're looking at,
I guess, no, that's right. I wouldn't be selling them. See, technically this has a problem of how this came off the high. I do not like how this came off the high,
Agreed.
So that's a problem. Like, okay, this thing is going to get destroyed or what? Why did it go from 67 the next day it was down to 59 if the buyout's at 68? And that's always dangerous.
I was thinking that because it's probably a lot of people up there, and knowing the number that 68 and everything could get out at 68, they're thinking, why do I want to wait all this time?
I agree.
To get my money?
Yeah, it totally makes sense because you can just swap it off.
Right.
So I mean, 56.85 is the bottom of this. I mean, if it fluctuates in there, that's about it. You know what I'm saying?
Right.
So.
Well, I know it's underpinned by, their earnings and their dividends and what have you, and they are selling off. I think some of these sales are actually going through because the British Tobacco is involved in this as well.
Okay.
So.
And anyway. UA is the other one you'd like to look at?
I love that company.
Okay, you got Under Armour. That's trading out at 66.80. And
I'm wondering if it wants to close that gap.
So you get a gap here that's open, folks, from 59.50 up to 65. Yeah, it does. And just hang right there. And this is a classic too. What happens? It poked its head in there. It poked its head in there on the 22nd of September. Then it poked its head again the second. Now watch this. This is where it's subtle, folks, but you can pick this up. The first time down, on the 22nd, you did 3.2 million, okay? Now watch. You go back up, and you do 4 million. Now, that's good, but you're going to see, okay, what am I going into? So the 4 million, we'll just take the crossbars, right, was going into 5.4. So that correlation is like, okay, you're pushing with volume. That's good, but guess what? It wasn't 5.4. Then what you do is that, okay, it tucked its head back inside the gap, so then you see, okay, how did it do it? It ran into it with 3.3. It did 3.1, and then Friday it did 1.9. So that little correlation there, you can see it's subtle, but percentage-wise, you can see it's trying to make its way down into that gap. You know, so I'd let it fill the gap, man. It'll fill that gap. Once it, you know, the 65, 50 area, it's punched a couple holes through it, and I suspect you're going to get it filled. And then figure out your, I'm sure you already figured out what your game plan is, but it'll probably get a lot better once it fills that gap, man.
Well, one thing I've noticed, yeah, and I'm looking at that real hard, but once that filled, I've noticed their products are, there's no discounting on those products in the stores.
No, that's for sure. That's for sure.
They're selling that at full retail, and I do a lot of shopping in Macy's.
Yeah.
And I can tell you, you can get, you know, the Nike brand or a lot of other brands, you can get them discounted. I've never seen a Under Armour product on sale.
And they're really expensive, folks. And listen, it blows my mind what I pay for gym clothes. I know what you're saying, man. Even the Nikes, it's hard to find them on sale too. But there's no doubt for little tiny shirts and pants, they have it down, and that's just going to keep getting bigger. I mean, because what has happened is that they're going across all different, basically, time frames, countries, all of the above. Have a great one, Bill. Have a safe one.
Thanks, Tom.
Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get 'em, folks.